If you are a business owner or an insurance agent, this information and data is going to be crucially of interest to you. According to an insurance journal, the cyber liability market is going to bypass the property market certainly by 2040. Some estimates are 2032 and 33. Think about that. That's 10 years from now, where the biggest market for insurance is a market that didn't exist really a few years ago, and most people didn't have any exposure to up until recently. Most insurance agents and insurance companies are very familiar with property insurance, casualty insurance, fire insurance, windstorm, damage to buildings, liability of slip and fall, lawsuits. This has been the business that insurance industry executives have been in for a century. Since the early 1900s, that was what insurance was about for commercial and residential. The actuarial rates, the loss rates, the sales process, the business expertise from agents and insurers was all based around knowing the property market. This is almost like a new industry being born within insurance that, for all practical purposes, nobody has any experience in. All of the loss rates, the risks, writing policies, endorsements, exclusions, coverages are all newly learned skills for everybody involved. The insurers, the reinsurance, the brokers, clients, underwriters, techs, customer service. This is all new territory. So if you are a business that is used to dealing with your agent for property and casualty, general liability, commercial umbrella, commercial auto, start having conversations about the cyber market. This market has had ups and downs. According to the article, there was a pause stabilizing the vessel. Cyber market is poised for a wave of growth. It could make it larger than the property catastrophe market. If the cyber market continues to grow at its pace, it will exceed property in terms of annual reinsurance premium 2032. First, there was the slowdown in growth by lack of capacity. But now there's an underwriting revolution as they reassess and underwrite portfolios. More importantly, as a client, your agent can help you not only place coverage, but more than any other type of insurance, they can help you avoid losses. Look, in the past, your agent probably didn't need to come out to your business every month to make sure you had fire extinguishers charged up, to make sure you didn't have risks of slip and fall. There was probably a annual audit maybe, but the risks and prevention of risk was well known within the industry, and most businesses and property owners had best practices for reducing risk, slip and fall risks, fire risk, catastrophe risks, because it had been well established for 100 years. Nobody needed to look at this every day. So even though your insurance agent might refer to themselves as a risk manager, they really didn't have to do too much to help you prevent risk because that's baked into the system. With cyber liability and all the cyber risks that go along with it, your agent is really going to need to live up to their title that they give themselves of a risk manager, because managing the risk not only is important for you as a client, but might be required by your insurer. In fact, your coverage might be contingent upon you having done certain risk mitigation procedures, things like firewalls and things like proper protocol for data and customer information and logins. And if you don't follow those protocols, you might not even have coverage, or you might get non-renewed or canceled, or a claim gets denied. So pay very close attention to it. This is a hidden, secret, kind of silent growth of a new industry within insurance that's going to turn everything on its head. Every legacy broker, agent, insurer is really going to have to reimagine themselves, reinvent themselves, especially brokers and agents. Because the insurers, they're going to see this first. They're going to see the claims first. They're going to do a lot of the heavy lifting of actuarials and risk analysis and cost-benefit analysis for different procedures. And they're going to pass it down to the brokers and agents. But as a broker and agent, you have to know how to talk to your client about how to place this coverage, how important it is, why it might be even more important than property and casualty. The risks are higher. Look, if you have a property damage claim, for all intents and purposes, the limit to your claim is what it costs to rebuild your building. If you have a $500,000 building, if it's leveled to the ground, the most you're out of pocket is $500,000. That's what your insurance is. If you have a certain type of cyber liability claim, there really is almost no limit on how high the risk or the loss could be. It could be exponential to your revenue. So having a good understanding of that market by your broker, by your agent, or by your insurer will help you place the right coverage and maintain different endorsements over the years as other risks materialize. This is going to be an area where new risks are going to be found every year, every month. And having access to a great market that can show you what the risks are will help you in your business, or even as a private client or high net worth individual, cover your cyber risks so that you can help prevent them and be covered if one happens. It's going to be more important to prevent them, because even if you have coverage, if there's a loss, it's not like, if you have a windstorm that tears off your roof, or you rebuild your roof, you're back to square one. A cyber risk could almost be unrecoverable. You might get some money, you might get restitution, you might get payment of claims, maybe something fixed, but there's reputational damage. There's permanent losses that may not be able to be recovered because data and cyber losses are intangible. Think about if you had, this is an analogy, not a direct measure, old wedding photos or photos of your kids that are irreplaceable, and those are lost. What amount of money replaces those? Cyber losses could be the same thing. It could be built up goodwill with your company. It could be employee cohesion. It could be client confidence. These things are hard to replace. And there's going to be limits on what the coverage is. So be aware, this is not meant to be a soapbox video per se, but watching behind the scenes where the reinsurance industry is predicting that cyber market for insurance is going to be bigger than property insurance within 10 years. That's a big deal. That's a big announcement. And in fact, we predict that it's going to be even shorter than 10 years. The rate this is accelerating, if you ask the insurance industry even 3 years ago what their prediction was, they might say, well, maybe 2050, maybe 40, 50 years from now. Now they're moving it up to 2032. That's 10 years away. And I suspect within the next couple of years, that will even be sooner, where the cyber market volume of coverage for reinsurance and premiums paid will overtake property and casualty probably by the next 5 to 6 years. So as a client, as a broker, as an agent, as a producer, be aware of this changing and stay ahead of it so you're not the last to know about cyber insurance. And even if you do know about it, you're aware of the current changes, the updates, the risks, the things you need to know about to help serve your clients better. And if you are an insured business, to know what questions to ask your agent so that you get the right kind of coverage, the right kind of service from a great agency or producer.